Dear participants, professors and researchers, ladies and gentlemen, it's an honor to contribute to this conference today, organized by Social Science and Humanities Research Association. My experience shows that even if the conference is held alternatively online, we still communicate during the conference. I kindly ask you to share your suggestions and recommendations and also have your questions during my presentation. My research work focuses on the progress in the creative economies, basically in two countries, South Korea, the host country where I work, and Singapore. The topic I present today was presented in an early stage on one of the conferences of the last year, and now it's completed. So, crowdfunding SMEs, this is a comparative analysis between Singapore and South Korea. And here is the overview. I will talk about the introduction, the methodology, then the characteristics and the definitions of SMEs and startups, then the reasons for facilitating crowdfunding, the regulations related to securitized crowdfunding, limitations and further research recommendations, just as well as recommendations to administrators and administrations, so governments, and the conclusion itself. So, SMEs and startups fail due to capital gap. This capital gap means that they don't have the amount of money they need either to scale up or to invest into automation, etc. So ICT and digitalization. Major employers are SMEs and new companies in healthy economies, and the financial burden provided by tedious creditworthiness check is a problem. Goal is how these two countries regulate crowdfunding, then why crowdfunding could become a major source in one or the other country, and do they really share some different or same approach to regulate crowdfunding, and how the current regulations restrict or stimulate the crowdfunding itself. There is a necessity to identify stakeholders, so issuer of securities is the offerer, and then the platform itself and the investor, and also crowdfunding for companies. So securitized crowdfunding, two basic forms, lending or equity-based. And then the different terminology exists for retail investors or small investors, and general investors and individual investors are all the same, but in the literature it makes a little bit of problem to find the exact term, and therefore a standardization would be necessary here already as well. The methodology itself hides or uses a comparative analysis due to similarities between the two countries. Education and economic development, the historical background is very similar to both countries, and the growing effort to focus and rely on creative economy based on research and development also seems to be very similar. See sections I try to describe, and from that actually I used only two: the importance of SMEs and startups in both countries, and the most recent crowdfunding regulations with implications also toward the future. So here is the first problem. The SME definition is not cover or does not cover the same definition in both countries. Whereas in South Korea, there is a differentiation between manufacturing and service industries. And the criteria is like employee numbers only in Korea, but in Singapore, this is employee numbers and turnover. And the manufacturing has like the maximum number of employees should be not more than 300, and the services should be not more than 200. Just as in Singapore, should be not more than 200, but also the sales turnover must be less than 7.3 million US dollars. Another problem will be then also about the startups. The startups definition is another issue, but let's talk about the SMEs in economies. In Singapore, it's 99. Also in South Korea, their share is very huge, almost 100% compared to large enterprises. The share of employment is similarly huge and large in Singapore and in South Korea. So South Korea huge and Singapore in that way large. And the added value in comparison to large enterprises, so large enterprises would be the 100%, and in comparison to them, in Singapore we talk about 47%, and in South Korea we talk about 35%. So here we see the differences and the widening gap between large enterprises and SMEs as well. The export share is rising in both countries, but in Singapore, the promotion to export and to internationalize companies is much higher. So therefore, this share what we see here must be much larger than 41%, and in South Korea this still lags behind, which has another reason, and we talk about that also in the future. Labor productivity comparison is nearly impossible. The data of manufacturing SME productivity is very difficult to compare, as there is no data for Singapore except for an estimate of 50%, and therefore I also wonder how the Singaporean government is able to measure and believe in productivity improvements of 3 to 4% thanks to the support of agencies run by tax monies, if official data of productivity index is not yet developed. This suggests that the reason why scholars could not state more accurate numbers in Singapore, and raises also the question why the city-state regulators have either hidden or neglected publishing productivity numbers in comparison to large enterprises. So the next issue is about startups, and the term startup is described with different definition. In Tech Asia, you see that here companies creating technological innovations with the intention to create a monopoly in the niche market, and Graham has another one without focus on new technology, scaling up fast, or another one in 2019 was made with Investopedia. So companies in their first stage of operations with the aim to capitalize on developing products or services for which a demand is presumed. The Singaporean startups are categorized in order to get maximum benefits from subsidies provided by Startup Singapore, SG as Singapore. This is an initiative of Enterprise Singapore, and 3 requirements are necessary to mention here to fulfill the requirements of the definition of SMEs, and then to be registered for less than 5 years at the time of application for grant, and the core activities must be carried out in Singapore. In Korea, the requirements are much looser, and it's not clear. There is no clear definition, and some programs allow only 7 years of registration, so less than 7 years, and some programs less than 5 years of old companies to get grants. So standardization would be necessary to get also clearer picture about grants and about the landscape itself. The financial crisis in 2008 destructively affected lending activities of traditional lending institutes worldwide. Lending conditions became complex, and the lending activity slowed down extremely, so that SMEs and startups had issues and problems to get the necessary funds. SME sector that urgently needed financial sources to invest into ICT implementation and digitalization and automation could not tap into lending. The credit risk assessment and the credit rating assessment were so holistic and complex that SMEs and also startups could not come up with the costs which were too high for them. So based on their size and young age, these companies need actually less complex, more standardized assessing of creditworthiness in the future. There is another issue which we can't talk about, and that's the young generation. The employment rate of Korea's young generation is one of the lowest in OECD countries, and therefore there is a growing awareness also of these young people with multiple ideas to launch startups. So I'm sorry, I just corrected the typo. So the government was seeking solutions to promote entrepreneurship and university industry collaboration through many phases of BK, so Brain Korea 21 program, to advance knowledge-based economy. And the government assists SMEs and startups in hiring young employees and encourages them also to remain in their positions. One of the key differences in SME and startup landscape, two countries can be found in their respective political contexts. Korea's economic policies focus on domestic pooling of financial resources to assist startups and SMEs because they don't rely on FDI historically. Singapore, in the history, they started from the very beginning relying on or depending on FDI. So therefore, domestically focus is rather marginal. And therefore, in Singapore, the administration regards crowdfunding as a negligible source, and in Korea, as a systematic and transparent protection would be necessary for retail investors because the reliance is going to be high in the future. Now, the double effect of financial crisis we mentioned, so there are companies which can benefit from low interest rates, and there are companies which also would be able and would be happy to get, but they are completely locked down from borrowings, and therefore there is a necessity for crowdfunding. Now, the demand to increase productivity to the levels of large enterprises is there. This is facilitated by digitalization, standardization, and ICT. The government intervention is huge, and funding enterprises in the early stages happens through cash grants business incubation schemes, financing schemes, and tax incentives. And it became so significant that now the reliance is huge, and that's what makes an issue. This also led to development in strategic areas, ICT, biomedical sciences, green technology and digitalization, selected by the government in Singapore, selected by Enterprise Singapore, and this could be also mentioned about Korea as well. Now, the diminishing productivity levels of SMEs in comparison to large companies has become more and more significant recently. So there is a widening productivity gap which we see despite of the subsidies received by these SMEs. So the pool side is there. Low interest rates on saving triggered retail investors, so you and me, to discover other opportunities. Demand exists from both sides. The SMEs to launch projects and businesses and increase production, and therefore the National Assembly of South Korea passed an amendment, and the goal of the amendment is obviously cutting down on strict entry regulations by drastically easing a burden of public disclosure of securities issuers, and by creating an investment ceiling for each investors, that is to protect retail investors from total losses. So using also the way of eliminating the information asymmetry. Jones and Kim from OECD, they made their recommendation in 2014 and also 2018. So they recommended the Korean government to promote angel investment and introduce also crowdfunding. They reasoned that crowdfunding would allow startup companies to obtain funds needed by entrepreneurs to launch their companies. This could encourage participation of general investors in equity crowdfunding while decreasing the burden through loan guarantees offered to SMEs in order to get loans from financial institutions. To facilitate this kind of crowdfunding, they, so Jones and Kim, also urged the administration to move forward carefully with the aim to protect investment of people at the same time. Now, the Korean legislative followed these recommendations and opted to add amendments to the existing act, so Capital Market Acts, in order to address and to facilitate securitized crowdfunding. The amendment, as we already see here, also contained relaxation of the restrictive regulations to issuers, disclosure pressure for crowdfunding. Under the ruling regulations, the crowdfunding platforms are prohibited to manage and hold investors' assets, and we will talk about the other restrictions in details soon. But let's compare now South Korea and Singapore here with the regulations. So amendment, new regulation is implemented in South Korea, and in Singapore we only see some modifications. Platforms to register with financial services commissions is necessary, but platforms can be excluded from mandatory registrations, so from CMS service licenses. there is a graduation process for startups, which means that after a completion of at least one successful fundraising through crowdfunding, companies can be listed on the Korean New Exchange, so it means CONEX, and the aim of the legislative body is that they could progress into KOSDAQ later on. The participation of SMEs and startups can happen only if they are less than 7 years old, but in Singapore there is no specific limitation of operation time, and in South Korea you get tax deduction if you participate, but in Singapore there is no specific tax benefit for this crowdfunding at all. Also, the regulation found it important that identification of stakeholders happens, and limitation of retail investors, and basically differentiation between professional, venture, and angel investors will happen. That also means that in South Korea there is a limitation of subscription height, and there is no additional precondition. But in Singapore, preconditions are installed for investors, and limited subscription height is also important and is implemented, but no limitation on investment from professional and angel and venture capitals, just as in Korea. And there is a return of funds to investors in case of failing the process of collecting the funds. So let's see in tabularized form these comparison. So there is a direction of low platform orientation in Singapore and stakeholder orientation in South Korea. Stakeholder orientation means immediately who is actually here protected, so the general investor or the retail investor in that way. And we see also there are two different acts, and also the requirements for establishing intermediary platform differs completely. So the base capital is like 35,000 only, and in South Korea, to protect basically the human itself, so the retail investors, this is like tenfolded is the requirement to start a platform, and therefore also security deposits are in Singapore available, and the appropriate human capital and some business plan are required as well. So here the minimum requirement is 35,000 and the minimum requirement is $411,000. So these are the requirements. And then here we see the asset management and possession. So can these platforms do asset management and possess the money? And no, not. So CMS licensed are prohibited, but here both, so asset management and possession of money of investors are prohibited by platforms. The license requirement is here written also necessary only for those offering services to general investors, but here fully required. So platforms need the license anyway in South Korea. Limitation on retail investors, there is no restriction at all. Rather, the requirement is the education and an assessment of knowledge and experience. But here in South Korea, we don't see such a thing. And then the requirement to hold securities is 6 months after issuance and also 6 months after issuance. And the requirements on announcement of subscription, so conduct due diligence and gather relevant information on platform. And in Singapore, there is a data verification also run by the CrowdNet. So there is a regulatory body which is doing it, an administration body as well. Let's see the limitation on retail investment in details in South Korea. The limitation here from general investors to same issuers is maximum 5 million won, and the annual investment limit is 10 million won. And in the case of qualified investors, this limitation is 10 million won to the same issuer, and then 20 million the annual investment limit. Professional investors are obviously excluded from these limitations, so therefore they can do whatever they would like to do. Limitation on professional and angel and venture investments, as I said before, there is no restriction, and graduation process in Singapore is not defined. In Korea it's possible, and it's also hoped for. Restrictions of operation duration, there is not specified, but in South Korea it is maximum 7 years, so less than 7 years. And the limit on height of issuance is 5 million Singaporean dollars, so 3.5 million US dollar, and in Korea this is much less. This is 1.23 million. Return on funds if raising fails, yes it is, and there is no specific regulation in Singapore, but there is a specific regulation. So the minimum what they have to collect or raise is 80%. If not, if that is not reached, then the amount must be returned to the retail and also to the other investors. Tax benefit is to general investors is not given in Singapore, but in South Korea, gradual tax deduction is available to them. So limitations are here. We have troubles because of unstandardized terms. So SME productivity, we don't know the exact definition. So what I would like to say is we have different definition in different countries, and therefore it's hard to measure also the key factors. And in Korea, there is only Korean literature, and in Singapore, there's a lack of transparency, and there are only estimation of figures available. Also, there are some recommendations to standardization of requirements to become an issuer of securities. It would be necessary define, explain, and educate stakeholder liability. So even in Korea, a protection of investors can happen only if there is a sufficient education and standardized assessment of knowledge of investors, and therefore this would be necessary. Also, prohibiting the investment from compulsive investors. So raising transparency would be good, or would be also enabled through allowing investors to know if there are angel investors, investment funds, and venture capitalists, so professional investors involved in subscription or issuance of securities. recommendations to administrations, once again, like education would be necessary, and a standardized assessment would be very helpful, and administrations need to be on continuous alert to protect against fraudulences. Crowdfunding is fast changing, and therefore being always in a monitoring modus is necessary. It would be also good to enable AI in decision-making processes. So artificial intelligence could help in decision-making processes, and there is a need for standardized processes to collect data. So the conclusion is that sustained economies also rely on a healthy SME network and on startups with innovative technologies. The lack of financial sources require a change in perspective. That also means that growing burden on administration, so on government, should be eliminated, or at least be mitigated by facilitating crowdfunding. And in South Korea, the regulatory framework seems to be proactive, including also general investors, while in Singapore there is no specific regard to crowdfunding, and therefore it also seems to be rather a marginal appearance. In South Korea, protection is necessary for these retail investments, and Singapore, education of general investors seems to be the approach. Thank you very much for your attention, and I hope that you could get some inside knowledge from my research. And if you have any question, please be so kind. Again, I ask you kindly to raise them. Thank you.